All right, thank you very much, Mel. We appreciate it. Michael, good morning, sir. How are you?
I'm doing well. Happy Friday the 13th.
And it's a good Friday the 13th for the markets, too.
Yeah, we're looking at gains across the board this morning, Roger. Thursday saw the Toronto stock market hit an intraday record high. It's up 16% for the year.
Wow.
And all the worries about the overhang of U.S.-China trade and an economic slowdown hasn't phased investors. I mean, we've seen these speed wobbles on a couple of occasions where one day the market will be down 800 points and then up 400.
But what I've learned from you, Mike, is that's August.
Yeah, well, that's true. But September is typically the most volatile month of the year, and so far it has not been. And we could see some more buying today because the talk is the idea of an interim trade deal between the U.S. and China, just to kind of ratchet things down a little bit, that's out there this morning. European Central Bank cut interest rates to below 0% yesterday and added all sorts of stimulus efforts. And so, yeah, we've got some positive signals here. Earnings have been okay. Consumer spending's okay. So it really got this disconnect right now because next week the U.S. Central Bank's probably going to cut interest rates because they're worried about an economic slowdown, which, of course, hasn't borne out in the numbers. Certainly not here at home.
So, in other words, we live in confusing times right now.
That is exactly what it is. And sometimes that's the best thing for the markets. There's the old adage, got to climb the wall of worry.
Really?
Yeah, that's a saying. And if things are too good, then it probably is, and you got to worry about something, I suppose.
And you should be looking for something then, right? If things are going too good, you got to be worried about it.
That's maybe the time to sell. I don't know.
Okay, let's talk about Smile Direct.
Yes.
Not so good a day.
Somebody overpriced this thing because it was one of these companies, Roger, and we've seen this on a couple of occasions this year, where these companies go public. They have no prospects in the near term to make any money, but investors think, you got to get in. And it doesn't turn out well. Case in point, Uber went public at 45, I think it was. It's at 34 today.
Ouch.
Smile Direct dropped 27% in its first day of trade.
First day of trade.
It wiped out. Market value on the company, $3.5 billion. It was remarkable.
I wouldn't want to be an investor having to explain that one.
Well, that's just it. And the underwriters of the deal, they're going to have to come back and say, we really overpriced this, or what have you. So I mean, it's not necessarily to be first in. Sometimes you win, sometimes you lose. Facebook. Remember when Facebook went public? It was supposed to be the huge IPO. It dropped, and it took about a year and a half for it actually to get back up to where it started.
So this might be one of those ones that people are just going to hold on to.
We will see. At some point, they got to make some money because that's what pays the bills.
Okay, fingers crossed. All right. Thank you very much, sir. Have yourself a great weekend.
You too.